Do you always feel like you don't understand what your closing costs will be on a real estate transaction? Here's why they vary so much. Hey, Mesmer.
Hey, friend. How are you?
Another day, another dollar.
Yeah.
At least I hope.
Yeah.
Speaking of dollars,
There's a lot of them out there.
there is.
But sometimes you have to pay them to get them, right?
Exactly.
Closing costs.
Closing costs.
So there's a lot to that. And man, I'll tell you, when I send out that HUD or that Alta, we don't really use CDs, but people, their heads spin.
Yeah.
Their heads spin as to what are all these costs? What are they paying? I guess, how do you even start to approach closing costs?
Well, so you just talked about the HUD, which is the document that you get for closing that says, here's, what you're paying for the property, here's the loan, here's all your closing costs, here's your bottom line, this is what you need to bring to closing. So I say, let's go off the HUD. So other than obviously just the overall purchase price and loan amount, the first thing that you're going to see on the second page of the HUD, not the first page, first one just kind of encompasses all the facts, very high level, but the second page goes into the details. Mm-hmm. And the first thing that's going to be at the top is going to be origination cost or lender fees. So average in the hard money DSCR space, you're going to see 2 points in origination. And I would say that's just more so a standard. It's not the rule. It's not required. It's just the standard. So I guess the one thing that I wanted to bring up is you don't want to pay 2 points? Fine. There's other ways to not pay as much in origination. Now, it's not disappearing. It's not it has that cost has to go somewhere, and one way that cost can be limited or eliminated is by increasing your interest rate. So there's ways that can be modified. So I tell clients all the time when we send terms and conditions, especially with us being a broker and us having this vast amount of lenders that we can work with, is you don't like the terms for some reason, just let us know. What's your pain point? What's stopping you from taking the next step to say yes to this transaction? Because there's always, if it's not going with a different lender, it may be modifying the terms slightly. It may be increasing the prepayment penalty. There's so many factors that determine that origination cost. So don't get in your head about it.
Yeah.
What else is in that lender fee section?
I mean, underwriting. So the lender costs. So things like underwriting, things like you might see a closing fee on there, a legal fee. What else?
The terminology is just different.
Yeah.
The fee is relatively the same. Somewhere in the, $1,500 to $2,500 range is typically. And the big thing is just because we're a broker, that fee doesn't disappear. Just because you're not working with a direct lender doesn't mean that fee disappears. Mm-hmm. So I think that's one of the things. Oh, and wait, conventional. That fee is also there. Typically on a conventional loan, it's itemized a ton of them allocating for a credit report or a tax cert or your flood cert. So they may put it in little teeny tiny fees, but it all adds up to somewhere in that neck of the woods. And I think in a lot of times, people are getting terms and conditions with just the understanding of origination costs, but I can definitely say, ask about the lender fees. We definitely want at all times for us to be comparing apples to apples so that there's nothing that's misconstrued. What's next? So we're going down the HUD.
Well, sometimes in that first box, you might have a something we've been seeing more of is a payment reserve. Yeah. So occasionally you'll get these lenders, especially on DSCR loans, where they will require 3 months, the first 3 months of payments be escrowed at closing. So what that means is so if your payment's $1,500 a month, you're going to bring an extra $4,500 to closing. That is going to be collected by the title agency and dispersed to the lender.
Yep.
And then that will cover the first 90 days of payments.
Yeah.
So you basically don't have a payment for 3 or 4 months.
Yeah, because naturally, let's say today's August 21st. If you were to close today, you're going to skip September's payment. Your first payment would be October. So in that scenario, those 3 payments would cover October's payment, November's payment, December's payment. First payment would be January 1st. That is something new. I guess I question a little bit. I think it's used most often lower credit. Mm-hmm. Maybe if you're limited on reserves, they're like, hey, we're going to give you some cash out. We want to make sure that you have some money to get this property up, running, and functional.
Also, DSCR. If the DSCR is lower, sometimes they'll make that requirement on there.
Which, I mean, I use the phrase think like the bank all the time. Mm-hmm. And the reason is I think too often borrowers have this mindset of, why are they doing that to me? And it's like, well, if this was your money, wouldn't you want some time for you to get settled and situated with this tenant and how you're going to work this this property and get stabilized and then have the rental income offsetting your payment? Because otherwise, we're not looking at your income.
Yeah.
There's not a way for us to give ourselves peace of mind with that. So this interest reserves gives you time to stabilize the property. Next would be title fees.
Yeah.
Title companies. We work with, oh my gosh, so many.
Yeah.
And I would say from one title company to the next, I wouldn't say there's any huge dramatic difference. Couple $100 here or there. And so I always tell a lot of people, like, focus on the service. Who do you like to work with? How easy do they make closing for you?
Yeah.
Or not? Like, do you want to always go to the title company? Maybe yes, maybe no. I will almost never go to the title company for my closings.
Sure.
So I have a remote notary that comes out to me, and so, but not every title company loves to do those type of closings. I think almost everyone will. But those type of things. I will say though, between one state to the next, title fees could change significantly.
Dramatic.
Or loan size. That'll start to inch that upward.
One of the things, okay, so here's something. So we're in Ohio. We do a lot of business in Ohio. Ohio is just a standard normal state when it comes to title closing.
Yeah.
But there are some states that are called attorney states.
Correct.
So attorney states, you have to have an attorney review and perform the closing, not just a title company.
Yep.
And that can add some additional fees. So if you are used to buying in Ohio and then all of a sudden you go to Georgia, I think, is an attorney state. Then
New York is.
And New York is. You're going to notice that your title fees will be more, probably to the tune of another $15,000 to $2,000.
So it's so funny that you say that. I have a refi right now, and the borrower's like, I'm solid as long as I don't have to bring money to closing. And we got the appraisal, came in a tad bit short. We disputed it, came up a little bit. I'll take it. But it's going to be tight. And so I literally told him, I was like, I'm not saying, yes, you're bringing no money to closing because I don't have a prelim HUD to know what the title fees are. At any given time, you can ask your title company to generate a preliminary settlement statement so you can know what those fees are. I mean, everyone's willing and able to be upfront about their fees. You just have to ask. Additionally, I think sometimes people forget. So yes, there's the title fees, but within title is recording. So there's typically a couple $100 in recording fees. I think in Ohio it's like $300, but that's if you don't know it, then it could sneak up and you're like, wait a second, where's this $300 coming from? So
and that's the county recording fees, right?
Correct.
So that's to go to the county and say, hey, county, I officially own this house. This is the mortgage, blah, blah, blah.
Yep, exactly.
What else we got?
Escrow,
yeah, that's a big one.
Yeah, and I think as a loan officer, it's probably, if people question the HUD, it's probably that section that gets questioned the most, because it is, I think it makes sense to us, but we've also been doing this for years and years and years, but for some people, it takes some explaining. So on a purchase, your escrow section, which is for your taxes and insurance, will include your first year homeowner's insurance, and to speak on insurance, make sure you're getting the right insurance. Can't say that enough. It definitely will change your costs pretty significant. So if this is a fix and flip property, you need a builder risk policy. And those are a little bit more expensive, but they're there to cover you because the property is vacant and the property is having construction completed.
And to clarify, the lender isn't taking the first year of insurance. It goes directly to the insurance company.
100%. Yep.
Yeah.
We're just collecting that policy. And honestly, I don't know that investors check as often as they probably should about making sure that those refunds on those flip properties come back to them. I would assume the insurance agent should assist in that manner, but it may be something to just make sure you have a process to ensure you get any refunds in regards to insurance. But making sure you have the right insurance and understanding that we'll collect the first year, full first year of premium at closing. But then, if this is a DSCR loan, we're going to continue paying your taxes and insurance after you close on this transaction. So we have to collect a couple months worth of taxes, a couple months worth of insurance. It's all based on when the tax bill is due, when the insurance bill is due. And I don't know how many times people are like, but you collected the first year homeowner's insurance. Why am I also collecting 2 months? And I'm like,
because you got to pay it in a year. So in a year, when it comes up, we have to pay another year.
Yeah.
Well, if we're skipping if we close today and we're skipping September's payment, I mean, there's 2 months right there that we have to account for in the next cycle.
Round.
Yeah.
And the likelihood that your insurance cost is going to increase is pretty likely.
Yeah. Oh,
It's
yeah.
pretty likely. Taxes, same thing.
Yeah.
Pretty likely.
They don't go down.
Now,
Generally.
the good thing is typically every 6 months, maybe once a year at least, all mortgage companies are doing an escrow analysis. They're making sure that they don't have too much in this account, or on the latter side, that they don't have enough in this account, which is where some people will get those escrow analysis documents, and it says, hey, your payment's going up $20. That's why, because they're trying to cover that shortfall. I think last but not least, I know that you wanted to talk about seller credits.
Oh, yeah.
Because that would be listed on a settlement statement.
Yeah. So let's say you're like, oh man, I've got the down payment, but I'm really shy on cash to close because of fees. You can negotiate that with the seller. So a lot of times with the DSCR loan, I'm going to say most lenders will allow you to go up to 2 to 3% of the purchase price in the form of seller credits. And what that means is the seller at closing gives you some cash towards your closing costs, right? Sometimes I have some clients that will negotiate seller fees way above and beyond the 2 to 3%. So how does that work? Well, for a lot of lenders, what they'll do is, let's say they'll lend 80% loan to value. That value is reduced proportionally by the amount of seller credits above and beyond the allowable amount, that's a lot of words. So let me give you an example. Okay, so let's say, we'll make it easy. Let's say it's a $100,000 purchase price, and the limit from the lender is 3%.
So
right?
$3,000.
So $3,000, but they've negotiated $5,000 in seller costs in order to
negotiate the deal.
Negotiate the deal. So what they'll do is they'll allow you the $3,000, but then they will take the $2,000 off of the value and then restructure the loan to 80% of that new value. So it's 80% of $98,000 instead of 80% of $100,000. Yeah. So it's not dramatic. I mean, usually you end up still coming out ahead, but the loans are just going to be skewed a little bit. But that's why you talk to us. We can help calculate that stuff and make it more digestible.
And then we also have very few, but a couple that will allow for even higher seller credits. So we have one, maybe two DSCR lenders that'll cover all closing costs, but not the down payment.
Yeah.
And then I actually have a deal right now. I have a fix and flip where the seller credit is massive, but literally I told the borrower, I was like, write the contract so that you can get out of it, that if the house doesn't appraise, so what they're doing is, I think the original purchase price that was being offered was $90, but really the property's probably worth somewhere in like the $130 range. Needs a ton of work in a smaller town. So it's more so the amount of investors in that town are just limited. So they're trying to be kind of aggressive on this. So I told them they wanted to try to bridge the down payment that was necessary. And so again, one of our lenders will allow for really unlimited seller credit, and it can be used towards the down payment. So we structured the purchase price with a large, so we had 90. We added this large seller credit directly to the purchase price. The seller's not paying for it. And as long as the property appraises for the purchase price, this deal continues.
Yeah.
But thankfully, they put it in the contract. If this doesn't appraise, then we're out and we move on. So everyone's on the same page. But seller credits are a huge way to just kind of, again, if cash is a pain point for you, maybe you have the reserves, you have a retirement account, you have all that taken care of, but true cash on hand is limited. Those are ways to kind of bridge those funds needed for closing.
And one other thing you just brought up, reserves. So it's not a cost, it's not a closing cost, but oftentimes lenders will require you to have reserves to make sure that you're not spending your every last dime on this thing, so that you can come up with, a couple of months of payments if maybe that tenant craps out and dips out. Yeah. So expect that you'll also want to have some reserves, and reserves can be cash. Well, I said cash on hand, but it's not cash on hand. It's not cash under your mattress.
Don't do that.
That doesn't. Yeah.
Don't do that.
Don't send me a picture of the cash on your bed. That's not a thing.
He's joking, but that has 100%
Oh,
happened
100%.
before. 100%
Oh, yeah.
happened before.
But anyways, so yeah,
Checking account, savings
checking
account.
account, savings account, retirement accounts. Sometimes they'll put a haircut on the retirement accounts as to how much they'll count, but still, just expect that you'll need to have some kind of reserves for most lenders.
Yeah, we should honestly probably do a whole thing about reserves, because I would say that surprises people sometimes, and so we'll get ahead of that. But settlement statement, funds bringing to closing. Are you ready for it?
Yeah.